Welcome to the Deep Dive. Today we're plunging into the world of Adobe Inc. You probably know the name, ticker symbol ADBE. It's synonymous with creativity, digital experiences.
Yeah.
Millions use their stuff. We've gathered a whole stack of sources for you, financial reports, recent earnings calls, analyst insights, news articles, the lot. Our mission, to cut through all that noise, pull out the critical insights about Adobe's performance, where they're headed strategically, their market outlook. We want you to walk away feeling, properly informed, understand what they're doing and why it actually matters. So the big question, can a company with this kind of legacy successfully pivot and really dominate the AI future?
Okay, let's unpack this. Let's start with the absolute basics, the bedrock. Adobe Inc., founded way back in 1982, headquartered in San Jose, California, a big diversified software company. They operate through, three main segments? Digital media?
That's right. Digital media is the big one most people know. Think Creative Cloud, Photoshop, Illustrator, Premiere Pro, and Document Cloud, so Acrobat.
Right, the tools everyone uses.
Yeah.
Exactly. Then you've got digital experience, which is more focused on the marketing and analytics side. And finally, publishing and advertising.
Okay, so products that are just everywhere, industry standards practically. But beyond those famous names, what really secures Adobe's position in the market? What's underneath it all?
Well, what's really fascinating, and you kind of have to understand this to get Adobe, is what analysts call its wide economic moat. And that's not just, some buzzword, it's real. It's primarily driven by these exceptionally high switching costs.
High switching costs, meaning it's just too painful to leave them.
Precisely. Think about their whole suite of software, Creative Cloud, Experience Cloud. It's all interconnected. It forms this deeply integrated ecosystem. For individuals, yeah, it's sticky. But for large enterprises, migrating away from Adobe's workflows, their file formats, PSDs, AIs, and integrations, it would cause massive disruption, significant retraining costs, re-engineering operational pipelines. It's hugely complex, so it becomes highly impractical. Adobe essentially acts as the de facto operating system for creative work and content supply chains across loads of industries.
So it's like the Windows for designers and marketers.
That's a good way to put it, yeah. This moat, this foundation, it's what allows them to invest billions in something like AI, feeling pretty confident their big clients aren't going anywhere fast. It gives them this, almost unique power to shape how creative work gets done.
That really paints a picture of just how embedded they are. But what does that significant disruption actually look like for a big company trying to switch? Is it just lost time? Or?
No, it's fundamental. For a large enterprise, it's not just learning new tools. Imagine the sheer volume of files. Photoshop files, Illustrator files, PDFs baked into every single project, every campaign, every archive.
Right, years of work.
Exactly. Now imagine converting all that, or worse, recreating it. Then add retraining maybe thousands of employees across design, marketing, publishing, plus breaking all the links to other business systems, compliance headaches, potential data loss.
Okay, yeah, that sounds like a nightmare.
It's a full replatforming. Most companies would only even think about it under extreme pressure, which gives Adobe, immense leverage.
So with that kind of dominant position, that unshakable moat, the big question for investors is always, how does that show up in the financials? Let's shift gears. Let's look at the numbers. What are they telling us about Adobe right now and where it might be going? Stock analysis time.
Okay, numbers. So Adobe's last close price was $347.01. Our research points towards a fair value around $480, although a very recent earnings review nudged that up slightly, suggesting maybe $411.46 based on the current trading price, which is around $350.
Okay.
Our internal price target is actually higher still at $533.06.
Quite a bit higher.
Yeah. And for context, it's 52-week range. It's been between about $330 and nearly $558. Market cap is hefty, $147.24 billion. Puts them right up there with the giants, Microsoft, Oracle, SAP, Salesforce.
Okay, and here's where it gets really interesting, especially if you're watching this stock. They just reported the Q3 results for fiscal 25, right? September 11th. And the word was robust. Exceptionally robust, actually.
Absolutely. They really smashed market expectations, didn't just meet them, significantly surpassed them. And that led them to raise their guidance for the full fiscal year 2025.
Okay, what were the key numbers?
Record revenue, $5.99 billion. That's up 11% year over year. And alongside that, non-GAAP EPS, that's earnings per share, adjusted for certain items to get a clearer view of core profitability, that came in at $5.31, up 14% year over year.
Impressive growth.
Very. And a big driver, according to them, was the widespread adoption of their AI-infused offerings. Also, crucially, their digital media annual recurring revenue, or ARR.
That's a predictable subscription money, right?
Exactly. That grew 11.7% to $18.59 billion. That's a huge, reliable revenue stream.
Raising targets for the whole year definitely signals confidence from the top. But what specifically in those Q3 results gives them that conviction, especially with, some broader economic uncertainties still kind of hanging around?
That's a fair point. The optimism seems really rooted in how strongly customers are taking up their AI-powered tools. It looks like it's bringing in new customers and getting existing ones to spend more. So the raised full-year targets for FY'25 are pretty significant. Total revenue now projected between $23.65 and $23.70 billion, and non-GAAP EPS between $20.80 and $20.85.
And this isn't just hope, it's backed by efficiency.
Seems so. Their operational numbers look strong. Gross margin is, well, frankly amazing at 89.14%. Net profit margin is 30.01%.
Wow, those are high margins.
Very high. Shows strong cost control and pricing power. And cash generation. They pulled in a Q3 record of $2.2 billion in cash from operations. Total free cash flow, FCF, the cash left after all spending, is $9.6 billion. That gives them a healthy yield of 6.52%.
And that FCF is key, right, for funding all this AI stuff.
Absolutely crucial. It gives them the capital to push hard on their AI strategy without needing tons of outside money. It fuels the engine.
Okay, so it really does sound like AI isn't just a feature for Adobe. It's absolutely central to their future, their financial outlook. How exactly are they approaching what you call that tectonic technology shift? And what makes their AI strategy, different?
Right. They view AI not just as like an enhancement. They see it as this fundamental tectonic technology shift. And they've explicitly called it their biggest opportunity in decades. That's strong language.
It is.
Their strategy isn't just sprinkling AI features here and there. It's about pervasive infusion across the flagships, Photoshop, Illustrator, Premiere Pro, and also building genuinely innovative AI-first solutions. But a key differentiator, especially for their big corporate clients, is Firefly, their own AI models.
What's special about Firefly?
The big selling point is that they offer commercially safe and indemnified AI generation.
Indemnified, meaning Adobe takes the legal risk.
Essentially, yes. It directly addresses huge enterprise concerns about intellectual property and legal safety. Think about it. If a company uses some random AI tool and it accidentally creates something that infringes a copyright, big legal trouble.
Right, lawsuits.
Firefly's indemnification promise largely removes that risk. So for corporate users worried about protecting their brand and assets, it's a massive draw. It builds trust.
That makes sense. Commercial safety is huge for businesses.
It's not just about cool creative features, it's about commercial trust and viability.
So they're positioning themselves as the operating system for creative work, but with AI right at the heart of it. That's a pretty bold ambition. What makes it actually feasible, and what are the hurdles, even with Firefly's safety net?
Well, the feasibility really comes back to that economic moat we talked about earlier, that deeply embedded ecosystem, those high switching costs.
Yeah.
It means they have this loyal, almost captive, professional and enterprise user base.
So they're building on a strong foundation.
Exactly. They're layering AI onto a platform that's already seen as indispensable. And we're seeing the monetization happen quickly. They mentioned AI-influenced ARR, so revenue linked to AI is now over $5 billion. And their specific AI-first products, they beat their full-year target early, already generating over $250 million in ARR.
Okay, so the money is starting to follow the strategy.
It seems so. And recent product news backs this up. Enhanced Firefly features like generating avatars, sound effects. They've launched Acrobat Studio and PDF spaces, pushing beyond just simple PDF viewing into real document productivity. And Gen Studio, their tool for marketing content creation, has new features and integrations with major ad platforms, Amazon Ads, Google, Meta.
So it's not just about making an image anymore, it's the whole workflow.
Exactly. Managing the entire content supply chain, from idea to delivery to measuring performance, that's the vision. The biggest hurdle, probably maintaining that leadership edge in an AI space that's moving incredibly fast. And balancing their own Firefly models with integrating the best third-party AI tech too, it's a complex balancing act.
Right. With all that aggressive innovation, that ambition, there have to be challenges, risks. What are investors worried about? What headwinds are they seeing? And how's Adobe responding, competitively speaking?
Yeah, definitely some important questions being raised by investors. One concern is direct competition from the big ad platforms like Google or Meta. They're integrating their own AI image generation diffusion engines directly into their ad tools.
Cutting Adobe out of the loop, potentially.
That's the worry, yeah. Especially maybe for smaller businesses. But Adobe's response, their commentary, is that while, sure, small businesses might use those built-in tools, larger enterprises need comprehensive, multi-channel solutions to manage their brand and content properly, which, they argue, only Adobe really provides at scale. And they're actually partnering with these ad channels for things like Gen Studio, so it's maybe more co-opetition than pure conflict, especially for the high end.
Okay, that makes sense. Playing to their enterprise strengths.
Right.
What about the mix of AI models people actually use inside Adobe software? Is there a risk users just prefer third-party AIs, undermining Firefly?
That's another valid point people raise. The mix of AI credit usage, are people using Firefly or bringing in other models? Adobe's strategy seems to be about offering choice and deep integration. They want to make pretty much any AI model available within their applications.
Be the platform, not necessarily the only engine.
Exactly. Firefly likely still drives most of the usage because of that commercial safety and the tight integration. But allowing other models helps keep users within the Adobe ecosystem overall. It's about being the central hub where all the AI creativity happens, regardless of the specific underlying model.
Okay, I see. Provide the workbench, let people use their preferred tools, but building and running all this AI, it must cost a fortune, right? GPUs aren't cheap. Are investors worried about margins getting squeezed?
Absolutely. That's a big focus. The potential impact on margins from all this infrastructure spending, especially on GPU fleets. Adobe's management says they are, and I quote, maniacally managing inferencing costs.
Maniacally. Strong word again.
It is. It means they're intensely focused on optimizing how they use those GPUs, tuning the algorithms, basically squeezing every bit of efficiency out to keep costs under control. They're aiming to maintain healthy margins even with these big investments. Plus, they see AI as an and proposition, not an or. Meaning it drives both traditional growth, more seats, more subscriptions for creative teams, and new consumption-based revenue from people using AI services. So they believe they win either way. More subscriptions and more usage fees. Growth on two fronts.
Okay, that's their argument. How are the analysts reacting to all this? Is there a clear consensus view or are opinions all over the place?
It's actually quite varied, which kind of reflects how complex this whole transformation is and the high stakes. The average analyst price target over the last 6 months is around $437.50. But interestingly, we've seen several well-known firms, Oppenheimer, RBC Capital, Mizuho, Barclays, they've recently lowered their price targets.
Lowered, even after the strong results.
Well, lowering doesn't necessarily mean bearish. Most of those targets are still above the current price. It could be they're reevaluating the competitive landscape, maybe factoring in the high cost of AI investment more cautiously, or just recalibrating growth expectations for a company this big. It's complex.
But not everyone is trimming targets.
No. On the other hand, you've got Redburn Partners, who recently reiterated a sell rating. Their target is way down at $280, so clearly there are still analysts who see significant headwinds. Maybe they think the valuation is still too high, or that competition will erode that moat faster than others expect.
So quite a spread of opinions then.
Definitely. It really underscores how multifaceted this whole situation is. The market is actively debating just how big Adobe's AI opportunity is and how resilient that famous moat will prove to be.
Okay, so we've taken quite a deep dive here into Adobe Inc., a company with undeniably a formidable economic moat. Really strong recent financial performance too, and this aggressive strategically driven push into AI, which they clearly see as absolutely massive for them, their biggest opportunity in decades. We've looked at the innovation, the impressive numbers backing it up, and also the challenges and concerns they're grappling with, hopefully giving you a pretty comprehensive picture.
Yeah, and considering Adobe's path, especially with how fast they seem to be monetizing AI and building out that platform strategy, here's an important question, maybe something for you, the listener, to ponder. How might Adobe's operating system for creative work evolve even further? What if it truly becomes the central hub for all digital content creation? Not just for the pros, but for everyday users too, seamlessly using both Firefly and third-party AI models. Could Adobe become so pervasive that its name defines the very act of digital creation itself?
That is definitely a lot to think about. Where does Adobe go next?
Well, we hope this deep dive into Adobe Inc. has given you a clearer, more nuanced picture of this tech giant. Thank you so much for engaging with us on the deep dive. If you found these insights valuable, please do subscribe and hit that bell icon. It really supports the channel and ensures you won't miss our next deep dive.